Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the Bitcoin market. So just to remind you, this is weekly pattern and everything what's going on right now in lower time frames were considered through the the picture of this pattern, so the prism of this pattern. So currently you could see that in the recent 3 weeks performance turned really quiet, and 3x3 moving average accurately envelops the range of the recent 3 weeks. This is very typical price performance for a double repo pattern. By the classical shape, here's we should get some acceleration to the downside if double repo really starts work correctly. So it seems that the 1-2 weeks probably will be decisive for this pattern. The target for this minimum target of the double repo stands around 81.20. So this is 50% support of the whole thrust of the double repo. So now we're turning back to intraday performance daily chart analysis, where we actually have some patterns for discussing and for trading. So on a daily chart, I do not see something really important. Market stands in the same tight consolidation. Last week we've got here a reversal bar, but since then you do not have any big acceleration. It means that we probably could keep dealing with the same pattern that we already discussed. Particularly speaking, these hand shorts. The first part of this pattern has worked perfectly. So last week we were at the bottom of the hand and we said keep watching. If the pullback will start, if you remember, the headline of our report was the possible pullback to the 101, 102 area. It has to happen immediately right now and right from the current levels. And the pattern that theoretically could trigger this is a hand shorts. So currently you can see that market mostly has completed this pattern. I mean, not reach the target, but they complete the point where you have to make the decision if you would like to take the long position. Market right now stands in the bottom of the right arm. Simultaneously, this area, as usual, is a kind of the vital point, the critical point for a pattern. If you will see that market keep going lower back to the lows, it means that hand short is ready to fail. You will not get any upside pullback, and market is ready for a downward continuation. This is how this area is important. At the same time, this combination gives you unique possibility to take the position with very tight stop orders. So you do not need to place it too far even below the head. It will be enough to place it somewhere in halfway to the bottom of the head, somewhere in the middle, between the lows and the head. So that's the attractiveness of this situation, because you could get big reward if hand short starts working, but your risk stands very small. In fact, this type of the points, I call it as a culmination points, they provide you the best risk-reward ratio. So it doesn't guarantee you success, but your risk will be minimal at these points. So currently you can see that on the bottom of the right arm, we have got this triple to buy pattern. Theoretically, using this pattern, you could place the stop even below these lows. It will be enough. So this is about those who consider taking long position and trade mostly on the lower time frames, on the intraday charts. Here's a particular 2-hour chart, maybe you trade on the 15-minute chart, so that's the stop for a possible upward action. Those who trade on the daily and would like to take the position with a double repo pattern, theoretically, if you take a look at the weekly chart, you already have the confirmation. You have already closed below 3x3 right here. If you haven't taken the position here and you do not have it, you could also keep close watch on this situation, and once market will start dropping back to the lows, that also might become the starting action with the double repo. So you correspondingly could consider taking the short position in this situation. So speaking about the targets of the bullish positions, the hand shorters suggest ABCD target somewhere around 101.10. So if you accurately calculate this A, B, C bottom, you will get approximately 101.10 area. At the same time, on the 4-hour time frame chart, recall that we also here have this long-lasting retracement after the engulfing type of action, right? So it's still valid, and we agreed to keep an eye on its minimum target and COP extension, 618 extension, which stands 100.5. It means that our destination point, if bullish scenario will be completed and if head and shoulders will work, should be in an area of the 100.5 and 101.10. That's approximately the area where retracement could happen, and this is the next point for considering taking the short position with a double repo if retracement will work. So currently, those of you who do not have shorts but you would like to take the short should do nothing. You should wait either for completion of the hand shoulders around 101 or for a clear sign of its failure. This market is ready to drop below the C point. This is the only two signals that you could use for possible taking short position. For now, it still stands unclear, so market keeps valid for both scenarios, and we just need to wait a bit and see what particular scenario will be completed.